Hey guys, it is Patrick with Financial Grit Media. If this is your first time watching one of our videos, make sure you press the subscribe button and turn on the notifications. That way you are alerted every time we upload a new video to this channel. Now, this video is all about dividend or capital gains reinvestments. And we'll talk a little bit about why you should choose to reinvest your dividends or capital gains if you are investing for a long period of time. Now, what is dividend reinvestment? Well, dividend reinvestment is this idea that when you buy a share of a company, the company is going to have profits or cash they can distribute to you as a shareholder. And so what happens is at the end of the year or the quarter, a company will have profits that maybe they don't need to use, and so they want to distribute that earnings to you as the shareholder. And so if we were to take an example like Southwest Airlines right now is trading at about $56 a share. Well, let's say at the end of the quarter, they said, hey, we've got all of this extra money because we were profitable and we want to distribute some of that to our shareholders. So they decide to distribute X amount of dollars to all the shareholders. And what that comes out to is 50 cents a share. So for every one share you own in Southwest Airlines, they are going to pay you 50 cents. Now, they're not paying you for services, they're distributing earnings to you as the shareholders. Well, if you owned 10 shares, that means that Southwest Airlines will cut you a check for $5. 10 shares at 50 cents a piece is $5. But the question is do you want that as cash? Or do you want your brokerage firm to take that $5 and reinvest it into Southwest Airlines and buy $5 more of shares? Now, this is one of the rare instances that you can actually own partial shares in a company. A lot of brokerage firms do not allow you to trade partial shares. Instead, they only allow you to trade full shares. By taking your $5 and buying, let's say, Southwest Airlines again, that $5, let's say their stock price is $50, you're going to get 10% of a share, so 0.1 of a share. And so what your brokerage firm does is they take the $5, goes back out into the market, buys 0.1 of a share, and then deposited 0.1 of a share into your brokerage account. Now you own 10.1 shares of Southwest Airlines. Now, the one misconception is even though you're reinvesting it, you still need to pay taxes on the $5. So you will get a tax form for $5 because of a dividend that they paid to you. So you'll pay the taxes on the $5. But again, the $5 you don't have in your pocket, the $5 is now in a 0.1 share of Southwest Airlines. Now, there is one concern that I have with reinvesting in your dividends, and that has to do with when you don't have a diversified account. So let's say you go in and you buy $100,000 of Southwest Airlines and then you reinvest it only in Southwest Airlines. Well, now your investment profile is heavily Southwest Airlines, and so maybe it would have been better just to take it in cash to lessen the risk, okay? And so think about that when you're thinking about reinvesting. Now, why is reinvesting a good thing? Well, reinvesting can be a good thing when you're compounding the earnings over time, because now that $5 that you didn't need is going to invest again in that share or that stock and make more money, presumably. Now, we say this all in the context of, as you might know, we are very big fans of index funds. Invest in the index fund. So when the index fund pays that dividend, there's not a lot of risk per se for us to take that dividend and reinvest it back into that fund, because that fund has a whole bunch of stocks that underline that fund. We're not necessarily being too risky by rebuying this stock that we're only holding that stock, and we don't have our eggs in multiple baskets. So that's a big thing to be concerned about when we're reinvesting. We're telling you to reinvest from a index fund standpoint, especially if we're investing for the long term. Now, this is different for those individuals that need that reinvestment because that is their fixed income. Fixed income is those individuals that probably are towards retirement. So they have, let's say, $1 million of shares in their investments, and then they get $50,000 a year in dividends. Well, obviously they're not going to reinvest the $50,000. They're going to take that $50,000 and they're going to live on it for the next year. And then the following year, their $1 million asset value will pay them another $50,000 and they'll live on that for the next year. So that's a little bit different from what we're talking about reinvestment. So again, reinvestment means that you're taking the dividend that the company gives to you, the earning that the company gives to you, and you're reinvesting in the stock that you already own, or the index fund that you already own, or the mutual fund that you already own. So we're reinvesting it to buy more stock, to grow our stock portfolio investment in those securities. So hopefully now you have a better idea of what dividend reinvestment is, and it's something that you may want to look to when you're investing in stocks or any type of other investment securities. So I hope you enjoyed this video. Please make sure that you subscribe to the channel. Turn on the notification, that way you are alerted when we upload a new video to Financial Grit Media's YouTube channel. Also like this video and put a comment down in the boxes below and tell us what you think about dividend reinvestment in your securities. With that, we'll see you in the next video on Financial Grit Media.